You want to move it off there? Good morning, traders and investors. Welcome to a delayed start here to Benzinga's pre-market prep. Lost a power outage here at the office over the weekend, knocked out a lot of computers, but we are back here live looking at our Benzinga Pro. S&P futures are trading down this morning, down 5.25 points. We were much lower overnight. Sunday night, we had an open at 61.25. Made a low, but now we're rebounding back, only down 5.5. Did sneak into yesterday's range. So 70.75, that's your pre-market high. We're only $2 below that level. Gold and silver are trading in the green too, as well as crude oil. Crude oil is up 80 cents here, over $48 at 48.08. Well, let's bring in Dennis here and let's start. Had a little bit of action Sunday night, Dennis, but once again, it appears that the market is overlooking the chance of war and kind of on the rebound here.
My new acronym for you, it's right here, and this is just sums up what this market is all about right now. FOMO, we all know what FOMO is, fear of missing out, and this is my new one, is FONW, that's fear of nuclear war, and I will say it still continues to be the play that FOMO, the fear of missing out, is greater than the fear of nuclear war. That makes absolutely no sense. But that is the way this market is. There's so much cash on the sidelines. Everybody thinks that there's going to be maybe, the market thinks there's not going to be much that comes of this. I'm scared personally. I think, I'm very high in cash in my portfolio because I think there is that potential that this is escalating very quickly overseas. There's another hurricane coming, Hurricane Irma, that's coming out. So I guess you could go also FOMO is greater than fear of another hurricane. We could call that FO. But too many acronyms maybe for an early Tuesday morning after Labor Day. But bottom line is there's just a lot of cash on the sideline still. And every time we pull back a little bit, unjustifiable fears, they just come back and they buy the market again. I don't get it. I mean, in normal markets, we would not be this close to all-time highs because there's just too much concern out there. But there is just so much. I don't know if call it ETFs. I don't know what you want to blame it on, but there's this continued buying pressure. Every time we pull back a percent or two, they come back and they buy these S&Ps. Joel, okay, so give us the overnight low.
Overnight low. We opened right on the low. The overnight low is 60.25. We opened up 61.25. So we opened up down 12, 13 handles, but one thing we do talk about a lot on the show is how important the opening print is. And if you were keeping an eye on that opening print at 61.25, boom, you went down to 60.25, and then basically it's been straight up from them. So I kind of look at this as like a very bullish scenario, even though the SPOs are down 575.
How do you short the market? I mean, how do you come in? I mean, if you were short, let's just set up hypothetical situation. And we have a lot of listeners. I'm sure there's a few that are short coming in today. You must be banging your head against the wall because here you've got, North Korea, doing more testing, lots of things, being said. The president's saying, we'll see comment when he was asked if, they were going to basically, so going to escalate here over against North Korea. And he says, we'll see. I mean, it's aggressive talking. Talk is talk still. And, we obviously, this could all just blow over and, everybody would be okay here. But there's just so much, another hurricane coming. That one looks bad coming towards Florida, or Hurricane Irma. It's going to be Thursday or Friday. I mean, there's a lot of reasons not on this market, but they continue to buy it. So how do you short it? How do you come in here and say, you have a million catalysts, two catalysts over the weekend here, lots of reasons. I mean, you get a merger COL, and COL, is finally, you talk about that, UTX, people who bought COL over the weekend thinking, oh, yeah, it's going to take it at 140. Well, UTX is going down, so you're not making money there. But I don't know. I'm just frustrated with this market, and that's why, I'm going with the flow. I mean, I'm not coming in here short in stocks today. I don't own as many stocks as I normally do because I think you could have a horrible headline overnight because you don't know what's going to happen with this North Korea stuff and also with that extra hurricane coming. But it's hard to short the market.
Yeah, Barron's even outlined several potential catalysts for a down market, a recession. They mentioned, antitrust maybe going against the big tech companies. They talked about lack of, political policies that Trump administration wanted to implement. But, you can count up all these reasons and you can say, we should, or we haven't, or we're not doing it. We haven't had a correction of a sizable proportion in a long time. But then again, it doesn't make a difference if the market doesn't go down. You can make all the excuses and you want in the world, but if something like this doesn't hit the market, you're thinking what really can here. But
Spinner's saying the classic thing: the market likes to climb a wall of worry. Lots of things to worry about. That's what it continues to climb. Every time somebody short stocks, they got to turn around and start covering right away, because if you're talking the overall S&P, they continue to rise. One thing that is making sense to me and is the gold rally. I mean, we have rallied significantly in the last 2 months in gold, and you would think the flight to safety, that makes sense. I mean, there is a flight to safety here happening right now in gold and silver. Both of them continue to take off. Gold is up here again today. A lot of times when the S&Ps are at highs, gold is going down, but there's definitely some money flying into safety. So there is money going into safer assets, and that is gold. So that does make sense to me. Makes zero sense to me if the S&Ps are up here, but I'm too scared to short it. And for justifiable reasons. Every time I short S&P, I lose money.
Is there anything here that's making you a little bit more inclined to get into the gold market? We've talked over the years as a potential asset in your portfolio. I know you had that ABX for a while. Here,
I've been underweight gold forever. I've never been a big fan. I think there's lots of other safe havens as well, and I like to, as opposed to just sticking my money in precious metals, I've always used the dividend plays
Correct.
as more safe havens. There's definitely a correlation there, and I have stocks like Southern in my investment portfolio. I have a lot of preferred stocks in my investment portfolio. In a worst case scenario where the world's in real trouble, those maybe get hit as well, but those definitely correlate with gold. So those are gold-like assets, they're like bonds. I mean, there's a strong correlation between gold and some of those other assets. So I would say my portfolio is defensive. I have it in different ways, though, playing defense. And I like to get paid. And if I'm holding gold, I'm not getting paid to hold gold. So that's why I don't put a lot of gold in my portfolio. But, I do get paid on all those preferred stocks. 5, 6, 7% dividends are pretty nice. If the market goes sideways, I'm still getting paid 6, 7%. Lots of those out there.
All right. Do you want to talk about the merger?
Yeah, so, okay, official deal. COL does get acquired by UTX over the weekend. Price of $140. Cash and stock here, though. I had the ratio. If somebody in the chat has it, I actually didn't write it down. And now I just did a quick look for it, and I didn't see it. So I think it's like $93 in cash plus the rest of it in stock. So what that means is there's a ratio there, and you just got to grab whatever that number is, and that's how COL will trade. It will trade off UTX. So if you're coming here this morning, you're saying, well, why is COL trading up only $1 with the price 140? Because it's in cash and stock, and UTX is trading down on this official news. It's down to 3 points here, so obviously that's going to knock down the price of COL as well. And then there's going to be a discount in there for antitrust concerns as well. But I don't see antitrust issues here. I think this deal will go through. So I think the risk guards are pricing a little bit of a discount just on concerns that something could happen, the deal doesn't go through. And then obviously the price of UTX is trading down this morning, so COL is trading not up nearly as much as you might think it would.
All right, let's just take a quick look at UTX, the acquirer. Now, you saw what happened to Gilead, right? The first day of the deal, there was a little bit of indecision, and then they just took off. They absolutely love the deal here. You traded down to 110.11. That's your pre-market low, but now you're right back up here, trading at 115.39. Let's see how that looks according to the day session from going back a little bit farther from Friday. A lot of areas you can see if it gets into super rally mode. You got a double top here over 120. Coming back on the downside, you can see they hit these things into the 114.5, 115 area. So that you're going to be support for UTX.
It's a good point you're making there, and I think the point you're making is that because Gilead got hit on the first day they acquired, and then it bounced right back, that, they tend to, these things sometimes get hit on the initial news and then bounce back. Gilead, a bit different story though,
How
because
come?
the market really wanted Gilead to buy some growth. They had some cash. They really wanted Gilead to get back into the growth because we know they've had troubles, with the growth there, and the market applauded it. And I obviously sold my Gilead last week in the 83 handle here just because I felt it was a little bit too much now, and I think they've over applauded. I still like Gilead. I still think it's a good value stock. And I think if it got back in the mid 70s, I think I'd re-add it to my portfolio. But I just felt it was like a little bit too much too fast. So, anyways, going back, what were you going to say?
I was just going to say, like, I don't, you've talked about your different long-term investments on the, over the years of doing the show. I think this is one where I've seen it, take quite a bit of heat. And then, you ended up, you're still showing a profit on it. But, usually you're like, once it finally gets going your way, you're more inclined to hold on to it. I could see that.
If it would have climbed, yeah, you know what? And I would have been. If it would have been like a slow, steady climb and just getting its way back up there, I think it would have still, it was just like this thing bought, and I paid a pretty hefty premium for Kite. Everything is in favor in it right now. I mean, you got to put it in perspective. I can't look at where I bought the stock. I got to look at what it's done. This has been an incredible run here, since it was hated back in June, 2 months ago at $64, now 84. I mean, this is a big, still, okay, well, they're going to get a little bit of growth from Kite, but it's not growing like, crazy here. And that's why, I bought Allergan. So I kind of traded it in. So Gilead, and now I own AGN. So I think I got more growth in AGN. I think I have more upside in AGN. So I kind of just traded it in a little bit. I think if Gilead comes back, I think I still like Gilead. I just feel like it just went up too much too fast.
Yeah, 84. I'll just go back to that Gilead chart. If you guys know anything following the show, these are the kind of formations Dennis and I love. Double top here, 84.13, and then the next day, boom, right there, 84.13 as well. So for continued upside in GILD, you got to clear that $84 level, traded down a little bit in the pre-market.
Let's talk hurricane here again, because we do have Irma, and they're saying this could be a bad one. Obviously, I hope, for everybody, in Florida, and, my parents have a place in Florida too. I, hope it's going to be okay. But, we've got to always, as traders, be prepared, for the best and for the worst. And if it's another bad hurricane, a stock like GNRC is one of those hurricane stocks. And I mean, one consideration here is typically when you have these hurricanes, GNRC gets a pop and then it's not that bad and it gets a drop. Well, that did not happen with Harvey. GNRC got a pop and continued to rise because it was that bad. Harvey was terrible. So it really didn't come back down. It's still going up. It's up here again this morning, probably on the same reason that, they think this Irma's coming and this could be bad too. So I wouldn't be surprised GNRC continues to catch a bid here ahead of Irma. If Irma's not that bad, if it, for whatever reasons, gets downgraded, or, if it doesn't, cause the kind of damage, obviously, that Harvey did, GNRC could then take a hit. But I think the next couple of days, there's going to be people scrambling into stocks like this, thinking that Irma could be Harvey part 2.
All right, now $41 you can see here basis the daily charts. We bumped our head up against that yesterday. Now, one day doesn't make a major resistance level, but if you go back to early February, you bumped your head against that level as well. So clearing 41, continued upside, and then you had a big old bar. I don't know what happened in February of this year to take us up to 44.84. Maybe that was a earnings report or whatnot. But 41 is a level in GNRC. And then Home Depot and Lowe's, are they worth a look here? Kind of.
Well, they were helped a little bit with Harvey. Yeah, sure. Let's take a look at them. They actually are flagging here a little bit, Joel. Look at this chart here on Home Depot. Look at this chart on Lowe's here. They've come back. I mean, you're at a point where this wants to go up or down right now, because if you can just draw the lines there, even on the charts, I know you got the charts there. Look at them both. They're at a point of, where buyers are meeting sellers, pretty significantly here. And if you think another big hurricane's going to come make a mess, these are two stocks that do benefit from that.
How about a little triangle here if we're going to talk technical formations? Look at that. The lows moving up nicely, giving you one part of the triangle, then coming off the 156 level, just touching that 152 high, and then you come in one right there at that 151 area, bunching up on Home Depot lows, trying to recover from a disastrous earnings report. Not disastrous, at least that's the way.
It was hit just because. They just, for whatever reason, reporting on the wrong days. Lowe's was hit a little harder because they didn't report nearly as good as Home Depot. I wouldn't say either of those reports were disastrous, though.
All right, but the price action was. Yeah, let's look at the 74.80 level here, basis lows. Those were the highs in the last two sessions.
Spencer saying URI too could be another hurricane play as well. Obviously, United Rentals is going to rent all the stuff that you might need to fix up your city. And exactly right. If you look at the action the last 5 days, been taken off. I think with Irma, on the, just 3-4 days away there, or maybe only a couple days away there, I think, it's a stock that people might still continue to move into as well.
And before we get off the hurricane sector here, Dennis, what's getting a lift? The most unfavored sector in the local area. Did you see GM and Ford last week?
Well, and that's another story. I have this on here for value. It's not just GM and Ford. Value stocks came back into play hard last week. So let's continue. We'll finish the hurricane and then go into GM and Ford. Do we have an 835 guest though?
We do. We got Nick Shaheen. Should we dial him
Bring Nick in, and we'll talk all this stuff with Nick. Let's get Nick on the fly. Don't take a break. We don't take
no breaks. No breaks.
Sorry, guys. So, anyways, we're gonna get Nick on the fly here. Nick's coming in. Nick can talk.
Good morning.
There he is. He was waiting for us. Nick Shaheen, how you doing out there on the West Coast?
Doing great. Cooling down a little bit. We had a heat wave last week. I think we're done with that.
Yeah. Are you concerned about this market? I was given a new acronym this morning. FOMO is greater than phone W, or FONW, which is fear of missing out is greater than fear of nuclear war.
Oh, I'm not a political expert, but this is hotheads at play, and you can't underestimate a hothead, even though it defies logic that he would want to do something like that, the North Korean leader. So, but you never know, and you have to. In my write-up every day, I say, even though I don't expect it, I have to be ready for the absolutely worst-case scenario that comes from politicians, which includes him. So. You have to be somewhat open to the idea that it could happen. Otherwise, you're going to get blindsided.
Well, how do you prepare yourself? So this is such a tricky market to trade because we have lots of worries. We have North Korea concerns, which are legitimate concerns. We have concerns of another hurricane coming up, down there by Florida, Hurricane Irma, which some people are saying could be Harvey Part 2. So there's lots of, big things for this market to worry about. Yet, when you look at the trading action, we were up on Friday. We were off overnight here, but we're already starting to come back in here again. It's such a difficult market to short because it seems to want to climb this wall of worry. Yet, if the worst case scenario happens and we actually, start a nuclear war, I got to think this market's in real trouble. How do you prepare yourself for this?
Well, in this case, the European markets were open yesterday, right? So they had a day to chew on this, and the DAX is up. So from a trading perspective, I think the trade is already done for that particular headline. As far as how to prepare for it, in general terms, this is a question that can be answered specifically to every portfolio. So if I'm long this, that, or the other, I have to protect this, that, or the other. I don't buy calls in the VIX. That seems to be a losing proposition. So I would attack directly my risks. So if I own Apple, I buy Apple puts to an extent that to cover the oh crap scenario, so to speak. What if the market crashes? That's what I protect. Losses you can take, but blown up portfolios you can't. So you protect the worst case scenario if it happens. It's hard to answer it with a blanket statement, but you have to look at your risk, know it. The risk, the first step is knowing the consequence of failure, right? Otherwise, how do you decide to take the risk or not? So if you see a ravine and you're going to try to jump it with a bicycle, okay, so am I going to die, break a bike, or break a leg? Then you decide whether you're going to do it or not. Then you talk about, okay, what are my chances of actually clearing this ravine? So that's how if you don't know the maximum extent of your risk, you shouldn't be in that trade.
We are on the line with Nick Shaheen. He's the author of Create Income with Option Spreads. Nick joins us every Tuesday. Nick, was looking at your write-up from the end of last week, and you said 4-day week, all hands off. You don't like these kind of weeks. Just tell us how you characterize them and why you're a little bit more, let's say, conservative on a shortened trading week.
Because first of all, the premiums get priced out. And then if you're selling iron condors, for example, for income, and you're trying to do it weekly, that forces you closer to current prices. So, but in definition, you're taking a riskier bet. So if you take a trade that usually has a plus or minus 2% move one way or another in the ticker you're trading, then suddenly you find yourself within 1%. So you're trying to really thread the needle. And 4 days, if something goes wrong, you don't have a lot of time to react. So if I sold the credit put spread and it goes bad on me, chances are I'm going to take the full extent of the loss on that spread. That's what I mean. And from history, every time I try to squeeze a quick trade because of, shorter time, theta kicking in a little faster, having a free day, so to speak, of, the premiums dying, it almost never works out that way. There's always a headline that jumps in, sneaks in. Case in point, here we are. We're coming into the first day of the first of the short week, and we're coming into a headline. So in my history, they tend to bring their own drama with them. So I gladly post the ranges, but I usually opt out of trading that week.
All right, now we're
the current week expiration. Not that I opt out of trading. Period. I prefer trading longer term.
All right, so here we are back at the top of the trading range. The all-time high in the S&P's 2488.50. We snuck into the 2470 handle. An intermediate number I was looking at is the all-time closing high of 77.50. I know you've been trading the ranges a lot, Nick. I know you were bullish. You tried to keep your bullish hat on last week when we had the bad news. Is this close enough to the top of the range for you to do some sniping? Perhaps taking some, some credit call spreads, or does it got a little more work to do?
Well, there are some credit call spreads to be taken, but I'm not rushing into them. And if I do, I take them out in time and I leave a lot of room. So if I wanted to short, I'm going to leave a 4 or 5% upside room for them to run a little higher. And as far as me being bullish, I'm not so sure. I must have failed in my expression of my opinion, because it's a range trade. And we've been hesitant. I just posted the ranges. So when we rally, I look at what we do at the upper end of the ranges where we've failed before, and how we use it. If we go through it, how we try to use it as support. And it seems like we pivoted around the 2433-ish level, and then we broke through it, and then we used it as support to get to the second level, which we broke through last week. And now here we are trying to use it as that support and try to attack the failure levers of the 4, which was 2476 or so. So if we break through those, then I start to look for those as support. So kind of trading the range we have at hand, but the fundamentals have not changed. So we still priced in the maximum benefit of a Trump trade, so to speak, and we haven't priced it all out. We keep chiseling at it a little bit, but we're still oblivious to the fact that a lot of it may have gone already, and may not be coming. And the politicians have some pretty good tough tests ahead. And if they clear those tests, or one of them, I wouldn't want to short anything, because we, just like Greece, remember, we celebrated, quote, the deal so many times that every time we celebrated, then it falls apart. We don't price it back out, or most of it out. We just keep up there waiting for the second headline. Hey, they're getting closer. Everybody buys. Same thing here. If they clear the budget, the spending bill, then we might rally a little bit. So I don't see a reason to rush into shorting via credit call spreads or buying puts right now. So trade the range. I'd sell some credit put spread if I open the credit call spreads, just so I can have some balance in my portfolio. But I definitely, trading the ranges has worked out best.
Nick, let's talk some of these value stocks here. They finally started to show some life last week. General Motors was up a couple bucks in the last couple of days. Ford actually showing life. Ford was $10.75, now $11.35. So nice pop up in Ford. And even General Electric, which everybody hates and had for dead here, had a little fake down there 3 days ago when it took out the lows of the move and then reversed, and now actually showing life as well. Full disclosure, I'm long some GE as both a trade and an investment. What do you think, on these value stocks showing life?
Well, let's speak specifically the three you mentioned. I just posted Ford. If I'm not long, I'm not chasing it here. because this is a pivotal zone where it held as support, then failed, and here we are back at it again. So if the markets in general are struggling, I don't see why Ford in particular is going to go up. I think the rally that we've had was on a headline for GM and Ford because of the Texas or the floods. Thousands of cars have gone bad, and floods usually total a car, and so they're going to buy the replacement cars. So I'm not sure that there weren't dealerships that were messed up and how that would affect the Ford sales, scrapping dealership cars. I'm not sure if the dealer takes the brunt of it or are they on. I have no idea. So I think it's a headline. And
so you're saying Ford GM are a little bit of a hurricane trade? I
think so. I mean, there was no fundamental change in their outlook that I know of. I may have missed it.
There was some sales numbers, but those usually don't move them that much.
But I also heard a lot of coverage of replacing cars, and so that's my speculation. So again, if I'm long, I
never thought about it. That's a good point.
If I'm long these two, I'll probably book some or maybe leave some runners. If I know the insides of why they're running, then hey, kudos to you. You got the trade, but I'm not buying them here. As far as GE, I think also there was a headline there. I'm not sure. I can't remember what it was. Something about. I really can't remember. So GE, I wanted to go long GE earlier, and I held back. Thank goodness. I wanted to sell some puts, but I couldn't find any premiums to sell that were enticing, so I stayed out of it. I don't like to chase laggards. They're laggard for a reason,
right.
And it's like they say, if we're at all-time highs, I hear a lot of experts say, well, let's look at laggards. This makes no intuitive sense to me. So if we're at all-time highs and you're expecting a dip, why on earth are you buying the stuff that didn't rally? So it just doesn't make sense. So, that's my opinion on these sectors. If you're in them, if you're recovered to your losses from getting into GE early, maybe this is a chance to get out and reassess.
One thing about GE, it did get some positive ink over the weekend in Barron's, because I was looking at this thing on Friday, and it had one of its best trading days in a long time, I think for 3 or 4 months, and then lo and behold, you see something in Barron's on it. So big move in GE. We'll see if we can get some follow through in the issue.
It's not cheap. It's like what, 28 the PE trailing 12 months or something like that. I mean, compare that to owning Apple at much less than that. Which one would you rather own from a valuation perspective and excitement perspective? It's not a slam dunk deal just because it's $24 now and it used to be $28 or $29 before.
Good point.
Let's talk Disney here. Dr. J is asking, got an upgrade. Any comments on the House of Mouse?
Sure. What is it trading this morning? I haven't looked at it.
It's up 20 cents. It got upgraded at Wells Fargo to outperform. Price target $116.
Disclosure: I sold some naked puts in in Disney, and I got out of most of them. I have a few left, and they're winning. But I find a strange island of pricing in Disney, and it kind of worries me on both sides. So, what's it doing in there? The gap above seemed to have happened on big volumes, so not sure they have the oomph to break out of that range. But this last couple of weeks, they seem to all fit within one candle after the gap down and in early August. So not sure what's going on technically. That's why I closed a lot of my short, because they were naked puts that I had sold, and I probably booked the rest within the next week or two. I don't want to have some risk open and end up getting blindsided, even though I still have room below. So technically speaking, it's kind of interesting. However, it is a strange place to trade. So I don't know how to play this. I know the news. I know they said they're going to spend a lot of money to compete with Netflix, which is kind of good news in the long term, and which is probably more a Netflix trade than a Disney trade.
You know how I'd play it, Nick? If it takes out $100, I think if it takes out 100, I don't want any part of this thing. That's a big psychological level that it's been trying to hold. The one concern for me is when you see a stock, and it obviously has been in an overall downtrend for the last few months. You get hit. A lot of times you want to see it bounce back, but it hasn't been bouncing back. It's just been hanging out here between 101 and 103 for almost the entire month of August.
Yeah.
So it feels heavy to me. And I feel if it could take out 100, then I feel like you got some downside there. So I think I stay on the sidelines, but if it takes out 100, I think I go short.
Yeah, and the opposite is also true. That's why I said in my point, I put a box around it and I said it's technically tight and the move is coming. I didn't say which way.
Yeah,
so
go with the winner.
Whichever limit is going to break, it's going to move in that direction.
All right, Nick, you were following Apple really closely last week. You were saying look for a leader, look for someone to emerge, and I believe we had you on Tuesday, and it opened up right near its low. I think it was like near a double bottom, and I mean that had a big part. It was a big cog in last week's recovery. Give us. I know you're not crazy about it fundamentally, trading down 65 cents in the pre-market, 163.40. Share your thoughts with Apple with us.
Yeah, Apple, when the market needed a leader, and Apple definitely stepped up to the plate on the day that the market needed it. I wouldn't short Apple too aggressively because you'd then be fighting the couple of deep pockets, Buffett and Apple itself. So dips will be bought in the markets. If I say that and I believe it, dips will be definitely bought in Apple because of those, the staunch buyers that are in it. Fundamentally, it's still on rails because of the machine that is iPhone. But if Tim Cook doesn't change his ways, I've said it several times, he will end up ruining this beautiful machine with nothing. So hopefully he will surprise us with the next big thing. And it just may have to be a different arena that they're playing in now. Maybe he's got something up his sleeves. But so far, I'm not impressed with what he's done with technology from the standpoint of changing the game. Like we always expected Steve Jobs to change the game one way or another. Every time they spoke, it was an exciting event. Now it's just different color this, different color that. So it rallied on headlines, right? Because they sent out invitations. I don't know when it's the 12th, I think, September 12th or something like that. Double check the dates. So let's see how the market handles that event. And let's see what comes out of that event. If they come out with another can kick down the road for the new iPhone, or if the new iPhone doesn't have the features that everybody's expecting, or if it's too pricey, or I'm not sure. So let's see how they trade that event. Until then, it's just a trade, and know that it could go either way because headlines tend to be binary. Reactions to headlines and the price of the stock.
Nick, let's talk some of the big guns here. It has been a comeback. It was a comeback week for Amazon. It was a comeback week for Google. Both of those stocks caught some nice bids. GOOGL bouncing off the 920 support nicely there just at the beginning of the week, and actually getting up to almost $960 there on Friday. Amazon, same story, bouncing off of support area that we've been playing around with in the mid 940s, and actually got down to 936, but then bouncing 40 points in the last 4 days. Thoughts here as Amazon and Google have had a little rally as of late.
Yeah, well, fundamentally speaking, I like both of these companies. I know people nitpick Amazon for spending too much money, but that's how a growth company operates, and it's still a startup, believe it or not, because they're starting into new venues all the time, and people miss that point. Technically speaking, the Qs, FANG, including these two you mentioned, were knocking on head and shoulder patterns or bearish patterns, and Amazon probably is the best representation graphically of that. I just shared it. But I also, a few days ago, I noted that they have upside potential because they were trying to break out of a descending trend line of lower highs. And also Amazon best represents that. So you can see that there is now upside hope, and the downside debacle has been averted for now because they are back above the neckline-ish or area. So next time they approach the neckline for Amazon, the next time it approaches the 950 area, I want to see how it behaves there, because then it stays a threat because they come back to it often and often, and then the technician will start looking for it. Okay, they lost the neckline, and it may invite some incremental sellers. From a fundamental perspective, I like these companies. I think Google had some negative headlines this morning about more fines or maximum fines or whatever. But in the long run, I mean, the companies are doing the right things to survive and thrive.
And you want to throw Google chart up there for us, Nick, before we
Sure.
let you go? And you're pretty quick on your trading view. Let's see if we have any other stocks in the chat.
Google is a good money-making machine for somebody that has the margin to trade it long term. Like if I could sell some puts in the $700 area and generate, a few bucks in premium, but that would only mean that I could actually own the stock down there or just do some credit put spreads long distance. If I'm going on vacation, these would be the type of trades if I wanted to bet on the market in general without having to do the SPX or the Qs or the NDX or something like that. So another way to hedge a bet is if I'm long Amazon, Google, a whole bunch of stocks, Disney or whatever, I can short the Qs, I can short the NDX, I can short the SPX, I can short the SPY via credit call spreads that have limited risk and way out in time with about 5 to 10% buffer. So this way, if the markets actually falls, then I have some greens to offset some of the reds that are happening in my portfolio.
We've been on the line with Nick Shaheen. He's the author of Create Income with Option Spreads. Joins us every Tuesday at 8:35 to give us his outlook on the market. Nick, great input as usual. We'll talk to you again next Tuesday.
Looking forward to it.
Thanks, Nick.
All right, SFU futures just hanging in there, Dennis. We're still down on the session, but if you think about all the volatility that we had, at least on the overnight open, I mean, it's giving you a chance here. What are you seeing in an imbalance line?
You know what? It's mixed. I do see some strength in some of the stocks you were talking about earlier there. I'm just going to go in well, obviously, the gold stocks are all showing buy imbalances. You got Barrick Gold, 146,000 to buy. Gold Corp, 64,000 to buy. Newmont's 20,000 to buy. Gold looks like it's going to be a source of strength here. But what I was alluding to is Home Depot and Lowe's. Both of them have nice buy imbalances here this morning. Home Depot, 54,000 to buy. 39,000 to buy in Lowe's. Call those hurricane trades. That seems to be the reason here. Generic GNRC also 7,500 to buy here this morning. So we are seeing Irma have its influence here this morning. Stocks, looking at Bank of America, your financials are very weak here this morning. Overnight, Deutsche Bank, some of the European financials trading yesterday were weak. Bank of America, 254,000 to sell. Citigroup, 85,000 to sell. JP Morgan, 27. Wells Fargo, 51,000 to sell. All those trading down fairly significantly here this morning, almost 1% when the market's only down 0.25%. So that does look like a source of weakness here this morning. GE, 125,000 to buy. So it's trading down here this morning, but that's looking, like if it opened up right now, it actually opened up despite trading down. Alibaba, 93,000 to sell. It seems like our buy imbalance guy in Alibaba is long gone now. It's been a few sell imbalances here for a while now in BABA. So looks like that institutional buyer that was there at the open for a lot of days in a row has been filled on the stocks that on the stock that he wanted. Square SQ, I've been noticing the trend of buy imbalances in this. I see it again here. SQ 69,000 to buy here this morning, despite the market trading down. That's pretty much it. They're all kind of medium sized, but it's definitely seeing Irma have its impact here this morning.
All right, but keeping an eye on the $26 area in Square. Sold off after a good report, and then that had posed resistance 3 days in a row earlier in the month. And you did clear it on Friday, but you did not close above that area. So above 26 looks like you have a little room on the upside. All-time high in Square, 27.97. Dennis, we only have a minute or two left here. I did not get a good look at the ratings.
A lot of ratings.
Oh,
so and we could just fly through them, or I can just I'll give you some highlights here. Like we already said, Disney's catching upgrade from Wells Fargo. We got Lululemon getting upgraded to positive at Susquehanna. That's trading the green as well. A big one on my radar this morning: U.S. Steel, symbol X, getting upgraded to buy at Bank of America. They're putting a $31 price target on the stock. Stock is trading up over 3% in the pre-market. This has been showing some life for a while here, climbing back from its disaster that we had back in April when the stock went from $30 down to obviously 21 and below 20, eventually. It's come back a long ways here now. So what do you think on a stock like US Steel as it's come back a long ways from where it was trading just a few months ago?
Nice upgrade here. What's interesting, it took it back to the area it was before the election, actually filled the gap, and took a while to get out of there. It's been a little bit of a rocky road, but I will just give you the former high of the move here. It looks like that's what we're approaching here in shares of U.S. Steel. A little bit, maybe hurricane, maybe a little bit of rebuilding efforts as well. The highest level that you've seen here is 27.44, and we're quickly approaching that. And then you got the gap up to $30 to fill. So getting into that gap area, slow roll. Let's see if the Bank of America upgrade can get us there.
Also, Viacom getting downgraded at Wells Fargo. That's just a market performance. That's just playing catch up here, but it is offered down here this morning a little bit more. So the Viacom weakness does continue. Oracle's a new outperform at Credit Suisse. They're putting a price target of $62 on it. Oracle's trading up a little bit in the pre-market. I will note there's some huge size of 51 on Oracle. So that's going to be the first roadblock here if the stock does trade higher. I was noticing over 100,000 shares in the book on Oracle, 31.
Whew, at 51. Yeah, those highs.
51, sorry.
Yeah, highs just above that. I see 4 highs back in July at the $51 area. Riding a 4-day winning streak as well in Oracle. So, all right, we're going to wrap up today's show here at 9 a.m. right on the nose. S&P futures are only trading down 6 points. I'm going to be looking for us to get back into that 24.70 handle, 24.70.75. That's your pre-market high. Above that, maybe some work to do at the closing price of 74.25. Coming back on the downside here, below that pre-market low of 60.25. Things are looking a little bit light until you get down to a low that you had at 54.75. Well, folks, thanks for joining us today. We will be back with you bright and early tomorrow at 8 a.m.